Hello, everybody, and welcome to my very first TA lesson on YouTube. Some of you guys already know I've been streaming on Twitch and giving TA lessons there live on stream for a while. But I was asked to try out doing YouTube. So yeah, here I am. You will certainly get to hear some very useful and interesting aspects which can help you improve your analysis and trading. But I have to say that this is a first try, and I want to get your feedback to see if I should continue like this or not. Yeah, so let's get right into it. Today, we're talking about the concept of pressure zones. A pressure zone is a really important thing in technical analysis, something you have to keep in mind forever because the basic idea is very simple. It is easy to grasp and it resonates with people, but the mastery you can attain if you want to become a master in identifying pressure zones. It requires some learning, some training over a longer period of time, but it is absolutely worth it. So what is a pressure zone? Let's keep it very simple. A pressure zone has two main attributes. The first one is we do have a resistance entity. A resistance entity is an entity, it's an object in the space of technical analysis on your chart that acts as resistance. And we do also have a support entity. And this support entity is the same as the resistance entity, but it is acting as support, a single entity, an object, such as a level, a trend line, and many more I will talk about later. So the second attribute to pressure zones is that there is a convergence happening. Both entities, support and resistance, are converging. They are running closer together. The space in between becomes narrower. So if you have price in between, the trading range becomes smaller. So this is the first term we have to talk about. What is a trading range? Investopedia says a trading range occurs when a security trades between consistent high and low prices for a period of time. The top of a securities trading range often provides price resistance, while the bottom of the trading range typically offers price support. So what we're talking about here is we have consistent high and low prices for a period of time, and we do have a ceiling or a top and a bottom or a floor, however you want to call it. And these act as support and resistance. So if we get back, we can see we do have two entities and both act as support and resistance. So the first requirement is met for a trading range. However, we do not have consistent lows and highs here because they are converging. They are running together here in this narrow space. So therefore, a pressure zone is, by definition, a trading range that is becoming narrower because of converging support and resistance entities. This is what a pressure zone is. It's a trading range that is becoming narrower, like this, for example. You maybe already know this kind of pattern. It's a triangle, a symmetrical triangle, for example. And you can imagine that pressure zones are can be found in many different patterns and formations. This is something that we will talk about today, and you will learn how to read the chart based on pressure analysis. It is a very important skill, and you will be very happy to have heard that today. And if not, tell me what I can do better, but I think it's very valuable to know all of this stuff. So, yeah, a trading range usually, let us talk a little bit more about trading ranges, maybe on a live example. We usually look for trading ranges in a horizontal fashion. So, for example, if we look for consistent highs and lows, we could maybe take this. So we do have almost consistent lows. We do have maybe a high range like this, where you can see that the highs are very on a similar level. Sorry. So what you can see is that it is easy to draw trading ranges based on a horizontal level range, for example, like this. But for pressure zones, it is important to also draw trading ranges in a diagonal fashion. This is an expansion of the original idea, but if you look at, for example, this channel-like structure here, you can see that we do have a trading range, but it is not going in a horizontal fashion. It's going diagonal, but it's also defined by a clear top and a clear bottom. So if we get back to the trading range definition, we do have a top that provides resistance. We do have a bottom that is providing support. But we do not have consistent high and low prices. We do have changing high and low prices, dynamic, but they follow some kind of logic. For example, in this case, they are both are increasing. The highs and lows are doing at higher levels each time. So this is something that it's important to know. When we are talking about trading ranges, we talk about maybe a range that looks like this or a range that looks like this. It could be both in this case. So let me get rid of all this stuff. Yeah, so now converging support and resistance is a very important aspect. We're talking about support and resistance that is coming closer to each other, not something that is running in parallel. So if we look at this example once again, we can see that there is not much conversion taking place. So the pressure, in theory, remains the same because support and resistance are not closing in on each other and exerting pressure on each other. So the trading range doesn't become narrower. This is a very important thing to understand. So we are not looking at channels, for example, so typical traditional price channels, but we are looking at triangles, wedges, and other structures that represent this kind of process, right? So I'm going to point out some examples. You can find them on all time frames. I mean, I don't know about your level in TA, but patterns is something that you learn very early. So most of you should already know about triangles and wedges, what they represent. And we today examine how they truly work and how you can trade them in a much more efficient and effective way. Let's take, for example, this structure here. As you can see, we do have something like a falling wedge structure here. It could be drawn as a descending triangle as well. It could be. But as you can see, it tried to break out and failed. So it effectively was confirmed as a bullish falling wedge pattern. And this falling wedge broke to the upside, confirmed support, and produced a rally higher. This is a very common example of a pressure zone, because you see you have converging support and resistance, top and the bottom, a trading range that becomes narrower, and it breaks out and volatility occurs afterwards. This is a prime example. You can also see an example here. You have a range that is becoming narrow. It breaks out, and you see we have more volatility afterwards. Let us briefly talk about volatility. What is it? It's a statistical measure of the dispersion of returns for a given security or market index. In most cases, the higher the volatility, the riskier the security. Volatility is often measured as either the standard deviation or variance between returns from that same security or market index. That should be enough for now. I think it becomes pretty clear that we have something like, you have low volatility in this area, but we have higher volatility in this area because the trading range becomes broader. It's expanded over time. You have a trend going on. So we can talk about higher volatility. Okay. Let me give you some more examples for pressure zones. For example, let's take this range. We just draw a trend line which represents our support in this case. Then we draw a top trend line, maybe like this. And as you can see, the trading range becomes narrow, it's tighter, and price ultimately fights its way through this resistance and goes on a rally. This is something that is very characteristic for trading ranges which become pressure zones. And we will see this over and over again in the course of the next few minutes. Okay, so you can, I don't want to dive too deep into the topic of patterns, but you can look at triangles, you can look at wedges. They all follow the same principles. The trading range becomes narrow, we see breakout, and this is something that can be traded very well. But there are other structures as well that represent pressure zones, something that you might not identify as such. And this is something that where it goes a little bit more into detail and becomes a little bit more advanced, and you need to use indicators in order to identify pressure zones. So let's talk about the indicators, for example. So if we look at this 3-day chart, for example, of Bitcoin, and I'm going to use, first of all, a trend line. I'm going to use this trend line here, this one, a very straightforward trend line, and I'm going to use a level. maybe not that long. So as you can see, what I just did was just to draw a descending triangle based on this price action here in 2018, where we had higher lows, lower highs, I'm sorry, lower highs all the time in this bear market structure. And we had a floor at around 6,000. And this structure ultimately broke down to it broke down to 3K, so minus 50%. The indicators I'm using here are just trend lines and levels. If you're a starter and you're new to technical analysis, you should stick to, in my opinion, you should stick to levels and trend lines to get a feeling for how a market develops. For example, you can observe the same thing here. You can observe here. It's the exact same pattern. You have lower highs, you have a floor, an even level, and you see that price broke down. And it didn't go down 50%, but yeah, it ultimately broke down. So you do have the descending triangle structure in a lot of cases, especially when we do have a correction going on. So indicators and trend levels and trend lines are useful tools in order to find pressure zones, but there is more to it. Let's take the Bollinger Band indicator, for example. The Bollinger Bands are a little bit more difficult to understand than levels and trend lines because they are moving, they are dynamic. I call this dynamic support and resistance. If you take moving averages, for example, or Bollinger Bands, or other dynamic support and resistance, they all share the properties of they are non-static, they move around, they change their values with each candle, and they adapt to the market in some way. And this is very important to make absolutely clear. A trend line, for example, if I draw a trend line like this, it doesn't adapt because it follows a very simple formula. It's a very simple equation that that creates a trend line, and it stays the same for all eternity. It's running into the infinite space. So this is not adaptable. It is basically a projection based on something you have had earlier. For example, these lows here. You take two lows and you connect them with a line, and you see you have a trend line, and you can project this into the future. You can basically assume that price will have something to do with this trend line in the future as well. And in most of these cases, it works pretty well. But Bollinger Bands do adapt to the market. They take into consideration the volatility that is occurring in markets, and therefore they look a little bit more dynamic, such as this. As you can see, they do use lines as well, but they are moving around. So what you can see here is that Bollinger Bands sometimes are far away from each other. The outer lines are the Bollinger Bands, and this center line is a moving average. I'm going to make this teal. As you can see, we do have a wider distance between the the Bollinger Bands here, for example, and they are very tight over here. This tells us that in this case, there's not a lot of pressure on price from these support and resistance entities because they're far away from each other, too far to have any kind of effect on price action right now, this case. But as you can see over here, we have a very narrow trading range here. And you can see that the Bollinger Bands are very close and they are providing support and resistance very near to actual price action. So these might have an effect on price and exert some kind of pressure because there are buyers jumping in at support and sellers jumping in at resistance. Also, buyers take profit at resistance and sellers take profit at support. So you do have these forces acting on price in this particular region here. So how to use Bollinger Bands effectively to find pressure zones? This is one way. You can look for very tight ranges like this, and you can expect a pressure zone to be there. But there are even better ways. The settings I'm using here are the default settings with a standard deviation of 2 and a length of 20. You can add multiples of those and increase the length by 10. For example, you use 20, 30, and 40. You have 3 layers of Bollinger Bands. And this looks like this. And now you can estimate how strong the pressure zone is. For example, in this case, in 2018, you can see that all 3 Bollinger Bands with these different settings are running very close to each other, and all of them gathered in a very tight space between 5,500 and 7,600 over here, and they put pressure on price. So you can expect pressure to be very high here. Also it's rather high here, very high over here, and less high over here. So you can actually measure the strength of the pressure zone by using Bollinger Bands with different settings. It's a very good approach, and you can easily customize your settings and find what is working best for you. In this case, for example, you see you have the 3 Bollinger Band layers. The first one merged, or finished its conversion over here. So you could say we have a degree 1 pressure zone here. Then the second layer joined here, so we have a degree 2, and the third one joined here, so we have a degree 3 pressure zone. You can easily come up with a system like this, a measurement system, how to estimate how strong a pressure zone is and what kind of volatility we can expect from the breakout. And as you can see here, we do have a very strong breakout out of this pressure zone. This works on lower time frames as well as on higher time frames. There is no exception. You can use this on all time frames the same. Of course, there's a lot more to Bollinger Bands. You can add as many as you want. It's completely up to you to play with that. The main idea is to find zones like this, here, over here. So if you can do this, you have done your job. You know that we're in a phase where we can expect major volatility, big moves coming up soon. So this is the first key takeaway of this session, how to know when we can expect major moves or rallies in the near future. Besides Bollinger Bands, there are other tools you can use. For example, I'm using an indicator I have developed. It's called Cloudy. And Cloudy is basically doing all that work for me already. I don't have to use all these Bollinger Bands. I don't have to look at the strength of the pressure zone. Cloudy is basically evaluating the pressure zones and range support and resistances. So as you can see, we have different colors, and price is being rejected at resistance, at range resistances. It's coming back to the range support, finding support there. And at some point in time, support and resistance starts converging pretty strongly, and we do have a zone where support and resistance is very close to each other. This is the same logic to Bollinger Bands, Trendlines, levels, the exact same thing. And we can see that we have a very strong pressure zone because we have different levels of support and resistance here. This yellow and red tells us that we already have a high degree pressure zone here, which will probably produce a very large and violent move to one side. You can use these tools. Cloudy is not publicly available yet, but you can easily take one of my Bollinger Band heat maps, for example. I can provide the link in the description, and it is very similar to Cloudy, and you can see where the pressure zones are. Another example for indicators you can use is, first of all, volume. Volume is a very important indicator when it comes to pressure zones, because you can see where trading is coming to a halt, where nothing really happens anymore. And this is usually the time when pressure is extreme and we can expect a big move soon. So, for example, in this price action from May to August in 2020, we can see that the volatility decreased over time, and the volume, as you can see here, it also decreased over time. So we do have additional confirmation that we are in a pressure zone here. If you see volume decreasing while volatility is decreasing, you can with confidence say that we are in a pressure zone, and we will see some big moves out of that. This also works on all time frames, so just have a look at the charts. You can see this on lower time frames as well as on higher time frames play out the same. Let's look at this tiny bit of price action here. You can see we do have not much volatility in this range, in this trading range here. So we can expect there to be some kind of pressure. Volume though is kind of stable though. So there's no confirmation by volume in this case, in this particular case. But I'm using the TTM squeeze indicator. You can find that in the, if you type in TTM squeeze, you will find it in the public library. It's a very useful indicator with the default settings. to find squeezes. And as you can see, this tiny bit of price action caused the TTM to flash a signal, this red signal, and this means that we are in a zone where support and resistance are putting a lot of pressure on each other here and pressing price in a very narrow range. You can use these signals to look at where we might see movements, but it's not necessarily the case that we will see something. The TTM is additional confirmation, additional evidence you can use to to analyze the situation. It is important to say that the TTM squeeze doesn't necessarily tell you the breakout direction. Pressure zones are very tricky. They are dangerous. I'm going to talk about this in a few minutes. But when we're talking about pressure zones, we have to expect volatility, and we don't necessarily know the breakout direction early. There are ways to estimate and to find out in which direction the breakout will happen, but I have to say that we always have to remain careful in pressure zones because they often lead to price action in both directions, such as here you see a spike up, you see a spike down, spike up, spike down, up, down, down, up, down, up. You often see these kind of moves out of pressure zones, and this is very dangerous to trade. So we have to approach this very carefully. Let me have a look at what I wanted to cover. Don't want to forget anything. Pressure oscillators. Yes, there's another type of indicator you can use. The TTM squeeze is such an oscillator you can use, but this one is one of my own indicators, and this kind of measures the pressure strength on the higher time frames. So as you can see, pressure can be measured, and whenever I determined for myself that whenever we spike up on this oscillator and we enter these kind of zones here, we can expect major movements in the markets. As you can see, I've pointed out some of these spikes here. Whenever we had a high pressure spike, there was significant price action taking place afterwards, such as here, a very high level of pressure, and we crushed down, we broke down with the entire market. We had the same situation over here. We had the situation over here. Also, this one was rather extreme, a very extreme pressure zone in the Bitcoin market. It was stopped here by resistance, but the pressure was still there, so it unleashed its potential within this bull trend here. This is something that we can see in advance. You just have to use the right tools. You can see this with Bollinger Bands, the same as with this kind of indicator. There's no real difference between them, just that it's easier for me to get an overview on the market like this without having Bollinger Bands everywhere. Yeah, but basically the message is the same. Okay, so this, let me see. Okay, this is it for the indicators part. Now let's talk about the relevance of pressure zones for technical analysis. What does it mean for us in the context of technical analysis. If I go back to this chart here, the 3-day chart of Bitcoin, I want to talk about two things. First of all, we do have this really nice descending triangle over here. A very nice example of a pressure zone. Pressure, this is the first aspect we have to keep in mind. Pressure is the fuel for momentum. It means the higher the pressure, the more momentum the market can generate into either direction. It is very important to know that if the trading range becomes narrower, it means lots of people are going to short these areas, placing their orders there because volatility is very low. A lot of people are going to place their buy orders here, longs, high leverage longs, for example. And this means that once we see some kind of movement, all these longs or shorts will get stopped or liquidated. And what this means, you can imagine, we're talking about a long or short squeeze taking place. So we might see strong movements up, down, in both directions. The price can go absolutely crazy. And this is something that happens frequently in the markets, especially on the lower time frames in bear market environments. We see this kind of savage, wick price action happening everywhere. Memes have been produced to describe these situations, such as the Arthur Hayes lightsaber meme, and other ones. I mean, there are a lot of different explanations why this happens, but the most obvious is as the trading range becomes narrower and support and resistance converging, bulls will happily long, high leverage long the bottom here. Bears will high leverage short the top here. And once these orders are very near to each other, it is easy for whales to trigger a landslide, a domino effect. And this is what happens in pressure zones. So the first key takeaway is pressure is the fuel for momentum, because momentum can be generated once we have liquidated all this stuff and we confirm resistance, and we have this kind of pent-up pressure in over the times when over 1 year of price action, we can expect panic to enter the market and drive price massively lower. So momentum is being generated as a result of pressure. The second key takeaway is that pressure zones is an early indicator of change in volatility, momentum, and possibly trend. Therefore, I would like to get some falling wedge, maybe this one. So you do have this kind of falling wedge here. And as you can see, pressure is being generated as we go down and enter a very narrow trading range over here. So we're at the point of maximum pressure, and we don't know yet, will it break down further because it's weak? Will it break up? We have to keep in mind that pressure zones are often an early indicator of change. This means that we will see something different to before. We are in a downtrend, and now we are entering a pressure zone. What can we expect? We can expect it is a possibility that we will change the conditions, the prevalent conditions, which is a downtrend, to an uptrend. And it actually happened here. This is something that makes sense when you look at it the way that we have a downtrend without pressure. Then we are entering a pressure zone. What does this mean? It means we are finding support somewhere. Otherwise, there wouldn't be pressure. We are finding support. For example, we could take this level here. And as you can see, as we are approaching support, buying pressure comes in. And the selling pressure is still there because it's a downtrend. So these forces are acting against each other. And the difference to before is we didn't have this buying pressure over here, but we have it here. So it means bulls are becoming stronger. It doesn't mean they are stronger, but they are becoming stronger. So it's only a matter of time until we see a change in trend. This is what a pressure zone means to us in the context of price action TA. Very, very important to remember. If you see pressure zones, there is a reason for that. It means two forces are clashing. And if you had one force having the upper hand all the time, and now two forces are clashing, it means the other side is becoming stronger. Very, very important. You can take a lot of these examples. Look at wedges, look at triangles, look at other structures. There's a lot you can do to identify these kind of things. Let's talk a little bit more about bearish and bullish pressure. What is pressure? Because we're talking about pressure zones, so we should probably talk about pressure as well. Imagine you have a support entity, you have a resistance entity. They are kind of converging. So you do have bullish pressure because bulls are buying the support. Algos, bots, retail traders, everyone who has an eye, who has taken an interest in this support is buying it, or at least the chances there that there's intensified buying pressure. You do have the same with bears and the resistance. And you can, there is, of course, it's a metric system. You can quantify the strength. For example, if you have a level or a trend line, and you say, hey, I think it's very strong, it's a long-term level. I say, hey, it has the strength 3. And you have a very tiny downtrend line, short-term, not very relevant. So you say it's strength 1. I expect it to be, to have this kind of pressure. Now you can just do the math and you can say, hey, what is the delta? What is the delta? It is -1 because of the resistance, and you have +3, so the result is +2. So you have a bullish pressure. You have more bullish pressure than bearish pressure. So you can expect the support to be stronger here. Even if price dips below the support, doesn't really matter. It can still be the case that we see a breakout to the upside, because you can estimate how strong the pressure is. This takes a little bit of experience, of course, and you need to have a good understanding of what kind of support and resistance is actually creating the pressure zone. And for this, to do this, let me show you something. Let me show you something interesting. Look at the this bottom here. This bottom in 2018-19 was created, seemingly created, by this kind of trend line, and we also had the moving average, the 200-week moving average. Let me quickly show you this. So we had the 200-week moving average running through here. So I know this is this trend line, this moving average is being valued very highly in the TA community. And we saw a first bounce here, which made absolute sense because it is being observed. It is there's buying pressure here, so we can expect price to bounce here. But as you can see, we kind of formed this trend line. But where did it come from? The trend line was visible only. It was visible from this point on because it went through here and then it met here with the support again. So it was formed over the course of several months. And the question is, where did it come from? So you have to do analysis to find the reason for support and resistance. For example, take this Bollinger Band. It's a long-term Bollinger Band that is usually, or long-term Bollinger Bands are usually respected very well, and they are shaping the market. They are kind of guidelines. They are the lines that price action is respecting very well in the long term. And as you can see, it is running through this area, and it actually helped the 200-week moving average to form this kind of bottom here. So if you understand how to get to the right support and resistance analysis, it becomes easier to estimate how strong a pressure zone is. So for example, if you know this is a long-term Bollinger Band and it has a very high strength by default, you can be sure that the upside pressure is pretty strong. So now you need to find the resistance. Let's just draw a level. I know there are different reasons for this level to be created here. You could say, hey, it's because of this range here, but it's not necessarily the case. There are lots of different reasons why this is a level, or this was a level. And as you can see, now you got a pretty clear picture of this pressure zone. You know why it is playing out. And you can estimate, hey, we have the 200-week here. It is putting pressure on price. We are actually gaining a distance to this pressure zone, to this support entity, by finding support on this entity. So bulls are clearly pushing price up here. And we do have this resistance, which is static, doesn't move, and bulls are more and more fighting with it. They are attacking it over and over again until they finally manage to break out. And now you can already see how you can estimate what side is stronger. The bulls are clearly stronger here in this case, right? So you could have expected this to break to the upside. Not only because it's an ascending triangle, you can draw it like this and say, hey, it's an ascending triangle, it will break up. But there's often a reason why a triangle is a triangle. It's not because of the trend line. the trend line is a symptom, but the cause is maybe something completely different. And in this case, you can see this makes more sense than any trend line. And here you could have expected a break to the upside. You could have traded it with a very nice stop loss. But it's not easy to find the correct support and resistance entities. This requires some experience and some trying, some experimenting, and you can take your own approach to this. I'm personally a big fan of Bollinger Bands because they help me in identifying these kind of zones pretty easily, and I can estimate how strong bulls and bears are in this case much better than I would be able to do with trend lines and levels. So let me show you something interesting. The third aspect to why this topic is relevant for TA in general. I'm going to get rid of the 200 weeks. So you see this kind of pressure zone we just talked about. We do have a very similar structure just to the other side over here. We have this level, this base that price is finding support on for a while at least. And we do have this trend line down. But as I just said, a trend line is always a symptom. There's always a reason why the trend line is there. And in this case, it's this band. It's the bull market barrier I have developed. It shows you a fib deviation, a fib Bollinger band that is coming down here, and price is respecting this. It has been respecting this band for years, and you can clearly see that when you follow with a trend line, it is running the same as this Bollinger band. So it doesn't really matter if you're using a trend line or a Bollinger band. The outcome will be probably the same. But there's a difference because a Bollinger band is there before the trend line. So you can see it before it actually plays out. I did some analysis on this one on TradingView in case you're interested in how I developed this Bollinger band. So we do have a descending triangle structure. And now I want to point out something that is very relevant for TA. How to know, or how to identify that we were right with our assumption that this is the support, the relevant support that we had to look at. And this was the relevant resistance we had to look at in order to find the pressure zone. How to know? We can look in hindsight that did we have any retests of this? Okay, let me phrase it like that. We do have an ascending triangle. We do have stronger support than resistance. We can expect this to break to the upside. If this happens, price usually comes back to test this support once again. And we can see this happening over here in March. So you can see this exact support that we used as a launch pad to lift off into this rally got retested here. So it is actually, there's the confirmation of support. It confirms we were right here, and it confirms it is still relevant. We got the same over here. We have this Bollinger Band, the bull market barrier, coming down as resistance, and we got a test after we broke out of this triangle structure. we tested this resistance once again to confirm it. It is this exact same move as here. Up, down, up. We have down, up, down. It is normal for price to test something that remains untested. And when you see we have a support here that is creating a pressure zone, we have a pressure zone breakout, you can expect at some point for price to come back to this entity and test it once again. In this case, it happened much later. It was rather unexpected, but it's still a valid retest. Here it happened much faster, sooner after the breakout. In this case, in 2019, when we broke down from this descending triangle, we got our retest very fast. And we even got another test with rejection, which led to this test. It's very interesting. So pressure zones actually help you in understanding price action a little bit better because you know what to look for. If you see pressure zone breakout, watch for the tests, retests. You can see this on all time frames. And you can learn to understand why price is doing these very insane moves, such as this one and this one. These moves have a reason. They do make sense to some degree. Okay, so this was the third reason why this is important. I can show you another example, which is very interesting. I need the bull market barrier. So let's look at this situation in 2016 when we came out of the bear market in 2015. You can see that the bull market barrier got hit, and here we had some kind of pressure zone forming. Price came in, entered this very narrow trading range over here, and it ultimately broke above this, but it didn't break out yet. Usually when the resistance or the support, the main resistance or support is broken in a pressure zone, we see the big move. But this is not the case here. Why? What have we missed? What are we missing here? This is the question. So if you look at price action, maybe you will find something, a reason. Look here, we have this very important level here. It is an important level because we are on a 3-day chart, and this level here has been found to be very significant. And as you can see, now this kind of price action makes a lot more sense. We do have the bull market barrier, which is the prime resistance here, but we also do have this level. So we do have an ascending triangle. Price is entering this narrow range over here. It is actually beating, it is going above the first layer of resistance, but it is staying below the second layer, and it's actually creating another pressure zone. But this one is bullish because we have just broken resistance and we are still above support. So we can expect price to move further up and break out. This is something that happens very often because you don't always have just one resistance entity or one support entity. You have multiples of them, and you can stack them on top of each other and see that price is moving between those zones. It's breaking out from the first pressure zone, entering a second one before fully breaking out. So yeah, this is the main takeaway here is that you have in pressure zones support and resistance entities, and if you see these have a clear significance for price action, these are shaping price action by pushing price up and down, you can expect these support and resistance entities to have significance in the future. No? This means such as a retest here and here, or you can look at a retest here after it has been confirmed support here. You can see the same happening here. It was resistance. It is confirmed here and here as support. It has significance in the future, and this is because it has been found to be very important in this kind of pressure zone. Okay, a lot of stuff to cover. Let's move on. Point number 4, relevance in TA. We also do have a phenomenon called nested pressure zones. Let me go here. Let me show you this. Nested pressure zones are pressure zones within pressure zones. If you truly want to understand price action, it is probably inevitable to get a feeling for when there's pressure and how these pressure zones interact with each other. For example, let's take this one. We do have a major resistance area up here where price is being rejected, it gets rejected over and over again. We do have this was the 10-year log trend coming up here, so we do have major support in this region. But as you can see, we do have a pressure zone because support and resistance are converging. So the first thing to take note of is that price volatility is decreasing. The moves are becoming smaller. If we look at volume in this example, let me show you this. If we look at volume, why isn't it showing yet? Okay, maybe I can show you here. It's the same range. You see that volume is decreasing as well. So we are entering a very strong pressure zone as we continue going sideways in this range. So there are multiple trend lines here. I've drawn all of these make sense, but we can't yet really say how strong these are. But what we know for sure is that this resistance range is very strong. It was resistance over here, it is here. So now we have to read the price action in that pressure zone. And as you can see, for example, we have an ascending triangle here. This is an ascending triangle structure. Usually this is a bullish sign, but we are directly below resistance. So we have to be careful of this resistance stopping the breakout of this pressure zone and creating a move to the other side that is still untested. And the untested level here would be this trend line. So what we see is that the price tries to break above to the upside, but it is directly stopped at this resistance, sold off, and we are testing this untested trend line here, shortly afterwards. This is something that is very typical for nested pressure zones. So I'm calling this nested pressure zones because we are stacking these on top of each other to understand the phase we are in this particular range here. For example, if you look at this, we clearly have a trend line here. We have something holding price up here, but we still have this resistance. So you could say, hey, it's similar to an ascending triangle, but it is not, because the structure, the actual price action looks a bit different, but we have support pushing price up. But what you can see is, as resistances up here and we are forming a channel here, you can see that resistance is respected much better than support at the moment, because as it seems, price is resting on support here. It is even going below it. It tried attacking the resistance. It failed. It got sold off, held the support just by a thread, very close, yeah, it was very close to breaking down here, as you can see from this price action. So we can already see resistance is much stronger than support. So we can expect within this pressure zone to get a relief move to the other side. So we see another attack, which usually ends up in a failure. And again, we're testing support down there. You can do this kind of analysis all day. You will find thousands, millions of examples of these kind of patterns and formations and price action segments over and over again on all time frames. It is important to know when you want to trade something, or if you want to find good setups, for example, like here right now in Bitcoin, you would like to look at where's the pressure zone. And when you see, hey, we do have a trend line here, we do have a trend line here, they are converging, so we do have this narrowing trading range, we have a pressure zone, we can expect a breakout. But to which side? Which is stronger, the support or the resistance? And there you have to do your analysis and see what's actually stronger in this case. You have, for example, this resistance level over here, and you see that once price actually tried to break out of the pressure zone here, it failed at the first resistance, got sold, and this was the early warning sign that we might break this to the downside. Although this break was not very strong, but yeah, you can see failed breakouts in advance. This is very important. I will talk about later. I will talk about failed breakouts later. Let's just stick to this for now. Okay. Yeah, why are pressure zones relevant in the context of trading? I have 3 reasons why I think pressure zones should be considered as an instrument or tool to use in trading. The first one is you can manage your risk in the face of upcoming volatility. This means if you know there's a pressure zone here, I'm just going to draw some trend lines and levels. As you can see, we do have this ascending triangle here, and there's a pressure zone. The peak is around here in this range, So we can expect something to happen here. We know that there will be volatility, either to the up or to the downside or to both sides. So we can manage our risks. What we don't want to do here is to enter high leverage trades. You could enter low leverage trades. You could wait for a breakout and then enter trades, depending on your setup. If you say, hey, I think this will break down, test this swing low, and then go up, then you would want to buy here and let price relieve some of that pressure already, but don't enter trades directly within this range, because you can expect price to go completely wild here. This is something that is very valuable to your risk management. The second thing is that you can actually trade the breakout direction when you know, or when you have a good idea of where it might break out to, in which direction. So what we do to find the breakout direction is, let's go back to the Bollinger Bands. Let me show you this. We see, let's take this narrow band here. What you see is price is grinding up while in that narrow trading range pressure zone, right? It's grinding up and it's ultimately breaking up. Let's take another example. Here you can see you have a narrow trading range. It's grinding up. It's breaking up. In this case, you see it's not grinding up. It's actually grinding down. It's breaking down. Let's take this one. Narrow trading range, pressure zone, grinding up, breaking up. Yeah, there are a lot of very similar examples. Narrow trading range, grinding down, lower highs, breaking down. What is this? As you can see, you can't really say it's grinding up. It's neither grinding down, but the trend is up. As you can see, we make higher lows consistently, and we are coming out of an uptrend. So this was a very difficult situation to read, actually, when we were here, but ultimately it became clear that this is a bullish reaccumulation happening here. The higher low structure tells a lot. So if in doubt, trust the trend. The trend is up, and we are keeping higher lows. So if in doubt, trust the trend. And this actually resolved to the upside. Yeah, you can find all these examples on a lot of different time frames. Let's go to the 4-hour. And as you can see over here, we have a very narrow trading range, pressure zone. We have this grinding up. Of course, we have wicks to the downside, but they got bought. This is important to notice. Here, narrow range, grinding up. Narrow range, grinding down. It's not that difficult to find an answer to this. This might be different because when you see we have grinding up, but we have failure here with a sharp sell-off. This tells you this is not as strong as it needs to be to keep going. We need to be careful. You could have de-risked here. If you were in a long at this point, this was the place to de-risk. And as you can see, it ultimately broke down because it was too weak. This happens also. It's a very common thing. So we have a pressure zone here. As you can see, we have a sharp drop that got bought, confirmed support here. So it was essentially a sideways range. No grinding up, no grinding down. You could say, hey, we do have this symmetrical formation. Yes, it is usually continuation signal. We are coming up from we're coming from an uptrend. The trend is up. So when in doubt, trust the trend. It's continuing up. Yeah, you can do a lot of these things. I'm doing this spontaneously. I didn't have a look before at the charts here. Very intense pressure zone here. You can see this very close, very tight range we are trading in. Wicks to both sides here, very tense situation. And then you see this grinding up, high lows. It's leaving the range with a strong high volume move. So what can you expect? Break to the upside. We do have very tight trading range, pressure zone. We have this parabolic move out of this pressure zone. So we do have some follow-up bullish price action. Yeah, this one, oops, this one, no, don't want the text. So you're looking at this, we have grinding up, we have a breakout, but then it got sold immediately and we fell back into the range, which is a warning signal. This is a warning signal. We fell back into the range from which we broke out earlier. So we might see a reversal here and yeah, this will become a failed breakout. Very important to read these things as they happen. Okay, this should be a demonstration of how you can actually find the breakout direction in advance. Price action tells you a lot. Expecting failed breakouts. Let me show you something that is very, very no, I'm going to go to this chart. Let me show you something that is a very good example. I really like this spot here. This was directly before the major crash in March 2020. So what we have here is a pressure zone because we do have this converging support and resistance in the pattern of an ascending triangle, which is bullish. And if you look at the price action before we had a sharp drop, we had this bottoming falling wedge formation here. We have again a bullish accumulation like pattern here, and we have this jump into another bullish pattern, the ascending triangle. So usually you would expect price to go up from here. And I did too. I thought it would rise higher because this bottoming pattern together with this bullish price action here is allows one to assume we will go higher. So, but we have to look at resistance at all the time. We have a big level here and we have a very big level also here. And as you can see, the bullish continuation pattern is not directly, the ceiling is not directly at the resistance. This is always a warning sign. If you see the ceiling of a triangle, for example, that is a little bit away, how much is it? Let me look. Not even 1%, but it is not directly at the resistance. The ceiling is not the resistance itself. So we do have multiple layers of resistance. This is resistance, and then we have resistance here and here. So we can expect a lot of downside pressure up here. And this actually led to this failed breakout. It broke up from the main resistance here, the ceiling of this triangle, but it got sold at the next resistance, and bulls didn't manage to hold, to defend this broken resistance, and it fell back below. And this was the warning sign. This was the level where you could say it's over. It fell back into the range. It will probably break down, and it happened. This kind of price action takes place over and over again, and it is really dangerous. And you can try to learn, and you can approach this by looking at multiple layers of support and resistance around pressure zones. So let me give you another example. If you have, for example, let's take this one again. I'm just draw it as an ascending triangle. So you could say, hey, it's the same situation. It's basically just a bit, it's large. It's on a higher time frames, not that tiny, but it's basically the same premise we're talking about here. So we could have seen this kind of pattern here again, or maybe this channel, which is also bullish. But we do have a bullish continuation pattern up here after the breakout of this range. But we could have expected resistance, for example, at this level. This is a huge level, and we also have this level. So there are certainly some resistance entities we can consider to be very strong, like this one, like these. And yeah, we could have expected a rejection. It is possible. But as you can see, this move was strong enough to drive price above both of these levels. Although it closed below the first one, it finally closed the second above. This was the confirmation that there's enough strength for bulls on the bull side to drive this higher. It is not an immediate rejection. If we saw a rejection like this and fell back into range here, you could have expected this trend to continue down. This is a very important, important knowledge for your trading. It doesn't really depend on your style. It is always important, if you have a pressure zone, look for resistance up and support below to find possible to read the situation accordingly. So if we broke down here and we would have been rejected back into range, we could have expected this move to continue up. This is very helpful. I can only recommend doing that. It's easy, it's done fast, and very powerful. And if you can see pressure zones and estimate their strength, you can also adapt by looking at multiple layers of support and resistance around this pattern. So let me get rid of this, just to to show you here. Let's draw it like this. Next support area here, here. These are the next two big support levels, and as you can see, we have a breakdown. And this is the exact same thing that happened below down here. Price found its way through the support, closed below. Bulls had some fight here. We had this retest move, which was very strong. But the breakout itself was to the downside, and you can see the strength happening here. If it would have bounced without a close below the first support level, we could have expected this to enter the range again and go up. We are actually in this kind of pattern right now. As you can see, we do have this. We are in a very similar situation here, and the first support, major support, is here, and the second is at 48. It's here. So these are the most important support levels after this pressure zone. So what you see is a break to the downside. You could have drawn this differently, of course. You could also draw it like this. But what you see is we have an immediate reaction here, a bullish reaction, no close below support. Now, if we manage to enter this range again, the pressure zone has proven to be not bearish, not as bearish, and all this pressure that is this pent-up pressure here will probably be released to the upside. This is the consequence. The pressure doesn't disappear, and this is not enough to release all that pressure. It will actually remain to be there, and it needs to be unleashed into in a certain direction. And if it's not to the downside, it will be to the upside. It's a logical consequence. Yeah, this is why pressure zones are important for trading, for all kinds of strategies. They are generally important to know and to understand. And this might help you a bit to prepare for future price action. So to summarize, why is this knowledge important? First, you can optimize your trades and you can optimize your setups. You can reduce your risk and manage your risk much better by understanding price action, by understanding pressure zones, understanding the degree to which they are dangerous, what kind of volatility we can expect after a breakout, and that we can expect failed breakouts as well. If you expect failed breakouts, it's much easier to prepare for multiple different scenarios. It is also important to understand when not to trade. Let me show you this real quick. This is also very, very interesting. We did have this this case where we had the support lines, and we're seeing this grind down through support, which is usually a bearish sign in a pressure zone. You see that there's so much pressure from above and not much coming from below. You could expect this to break to the downside, just to get killed here, because it's grinding through support, but it is not doing that because there's still this trend line here. It's actually continuing back to the past, but there's still this trend line here that allows us to see that price is holding support, and it's actually it's entering a pressure zone here. This is resolving to the downside, and it's entering a pressure zone here, and this one is resolving to the upside. We are back in range. Whenever we have a change in trend, sorry, whenever we have a change in trend, we see that this might unleash the pent-up pressure to the other side. It's an early warning sign you have to look out for. Very powerful early indicator. Okay, so you can also see price action in advance. So if you know we are in a pressure zone, and you know that there is there's grinding up, for example, grinding up here, the probabilities are pretty good that we will see upwards continuation. This is something you can use in order to trade the breakouts with decent risk. Most probably you will get good risk reward setups when trading pressure zones. So it's actually worth it. If you really get some experience in reading these zones, you can break the trade outs like it's what you've been doing for years. It's not that difficult, and can be really worth it. So, and the fourth reason why this is important, this knowledge is valuable, is you understand the true meaning behind patterns. So if you look at for example, this one, I mean, there are multiple ways how to draw these things, but as you can see that there is a very clear and easy and straightforward way how to interpret these patterns. First of all, you know it's a pressure zone, so you have to expect price to go in both, or in either direction or in both directions. Everything is possible in a pressure zone, so you have to look for the signs. Here you can see we have wicks to the downside, so there's weakness because price is spiking down. It's trying to break down. There's weakness, but there's also strength because it's being bought. But it is bought below the main support trend line here in this example. So this is an additional sign of weakness. We do have these wicks above. They get sold immediately. And this was the confirmation that we are breaking out of this pressure zone with a bearish retest, which could have served as a short entry, and you could have shorted this. Don't do the mistake and do pattern recognition. You see an ascending triangle and you say it's bullish, we will go up. No, this is not the case. With this knowledge, you will be able to see the difference between bearish and bullish ascending triangles, for example. You will also be able to see the difference between bullish and bearish rising wedges or falling wedges. Because a falling wedge or a rising wedge, usually they are told to be a rising wedge is considered a bearish pattern, but it is not. It's a neutral pattern, and you have to learn how to read it, and what side is actually stronger. Let's look for a rising wedge where I can show this. Maybe this one. As you can see, we have a rising wedge, but it broke to the upside. Why did it break to the upside when it's a bearish pattern? It's a good question. You have to read what is happening here. First of all, you have a pressure zone. You have converging support and resistance. Then you have to look for possible levels where this pressure zone might find support and resistance when it is breaking out. For example, this support, and okay, we were at all-time high, so there's not much here. You would have to work with Bollinger Bands, for example, here to find, or with FIB levels to find appropriate resistance levels. But as you can see, first of all, we see signs of strength by sharp moves up with wicks to the upside, but they got sold. A steep rising wedge like this, for example, it usually has the problem that the sell-offs are pretty sharp. In this case, the sell-offs are not pretty sharp. Sharp sell-offs are always a risk factor for structure, so they generate momentum and they can easily break the structure and come back down. In this case, if you have a rising wedge, like, okay, this is not a rising wedge, like this, the sell-offs are usually not that strong. So yes, it could still break down, but it is not necessarily the case. It could also break up, confirm support, and continue higher like it did here. So you have to learn how to read the pressure zone, which means you have to understand what kind of support is running through here. What is it? How significant has it been? And you have to understand what is a trend. You see, you have a sharp uptrend. You have to understand where the support and resistance levels are that you have to look for. For example, we have a resistance level here, so it confirmed support. This confirmation of support and break of this resistance was the confirmation that we will go higher. Although we didn't go high much, but we went higher. There's a lot to learn about these kind of patterns. It's not just, oh, there's a rising wedge, it's bearish. It's falling wedge, is bullish. No, this is not the case. And working with Bollinger Bands might help you actually to find a clue on how powerful these patterns are. Okay, so I think this should be it for today. If you got any questions, feel free to join my stream and on Twitch, link in the description. And if you like this kind of content, if it was helpful to you, let me know by leaving likes and comments and such. I'm really thinking of making an entire trading course like this, very in-depth, with lots of examples and strategies and this stuff, but I'm not sure if it's worth investing the time yet. So I really need your feedback. If you think it's valuable, and let me know. And thank you for watching. And I hope you will be able to apply this knowledge on your charts directly. Try to find some pressure zones, try to read them, try to trade them with care, of course. It's very important to always look out for your risks. Don't risk too much. And none of this is financial advice, of course. I'm just sharing my experience and what I've found out over the years, what might help and leverage your trading and analysis, of course. Thanks a lot, and goodbye.